Yo, what's up, YouTube? Welcome back. I'm going to do a breakdown of this trade setup before we get into the execution recording. And I just wanted to talk a little bit about patience when you're in a trade setup. We'll get into that in a few. I just wanted to first go over my daily bias going into the setup. I'm just going to give a really quick breakdown of what exactly I was looking for. So this is the Monday or August 1st, which is where I took that buy setup that you're going to be seeing in the execution recording. And basically with that buy setup, I was expecting price to target above this high right here for buy side liquidity and back into this imbalance. And the reason why is because last week we had traded up into that imbalance, but we barely traded into it. And then we traded down into another imbalance on the bullish side within this price leg before trading higher. So going into a new week, which this day is Monday, we see that Friday, Thursday, and Wednesday were all bullish. So I'm expecting that price action to continue into Monday and see us take out this high right here. So that was my daily bias going into the setup or going into lower time frame. So knowing that I have a bullish bias or I'm expecting the day to be bullish, if you know the power of three, you'd understand that if we have a daily bullish candle that's expected to form, say this is our daily bullish candle, every single candle has four components, right? And it has an open, high, low, and close. So if we know that a bullish candle has to have these four elements, which one is more likely to form first? Of course, the open is going to form before anything else because the candle has to open before it can do anything else. But what is it likely to do before it goes higher and makes a high and then closes? It's likely to make a low before doing that, right? So if we know that the next daily candle is going to be bullish, then we know that it's likely to open, make a low, and then go higher and then close. So we're going to take that lesson into lower time frame because you're going to see exactly that forming on lower time frame, and that's the reason why I was able to take a buy up above this high. So we'll go down into lower time frame. We'll be able to look at that setup. Let's go to August 1st right here. All right, so this black line right here is denoting midnight open. So that's basically when I'm starting my daily candle. So the daily candle on your chart really opens at 5 p.m. New York time over here, but the bulk of the daily range is going to be delivered between midnight open and 3 p.m. So after midnight, I'm looking for that low end of the daily candle to form. Since I'm expecting price to push higher up into this level, that means I'm expecting it to form a low first. So that means I want to see it push lower after midnight. And this is going to draw a lot of traders into shorts. So all of that sell side liquidity is going to be used for smart money to place counterparty longs to push price higher, right? So let me clear this real quick so you have a clean chart. I'll show you within the price action what I was looking at. All right, so we have that midnight opening price. Like I was saying, if we draw that out in time, we see that price hung around it for a little bit. And then around 2 a.m., it started to manipulate lower below this sell side right here, which is Asian session low. So looking at the fact that we had already traded lower, I'm not necessarily waiting to get in a trade yet. I need to see some more confirmations of that bias. So again, if we have a daily candle right here. And we already opened and we pushed lower. I don't know that this low is in place yet. We could still trade down below here. So I want to see confirmation that this is going to be our low, right? So this expansion away from that low is that confirmation for me. So as we expand away from that low, I'm looking for a high to form and us to trade away from that high, because that gives me a new dealing range, because we have this low right here and this high right here. That's a new range that we can trade within, right? So I want to see price return to a discount of that range, and then I'll start to stack long entries to go higher into that buy side liquidity that I was talking about on the daily chart. So you'll notice if I go down into a 1 minute chart in here, which is what 99% of you guys are going to be watching your trades on after you get in them. And a lot of people will not be able to wait through something like this, because this is a 5 minute time frame. So if I were to draw this out, let's see, this is an hour and 20 minutes, almost an hour and a half before price finally takes off into that buy side that I was looking at taking profit in. So an hour and a half of holding, if you're just watching price on the 1 minute time frame, you're probably going to be swayed in your opinions by fluctuations in price action, because you're going to see 1 minute candles that look like this, which are really not that significant in the grand scheme of things, especially if you know your setup and you trust your setup. So granted that I had already gotten the trade right here and I had to wait an hour and a half for it to actually take off, you'll see me holding that the whole way through. And the patience that's needed to hold through all that is going to be found in seeing something happen over and over and over again, and trading with the same processes or sets of rules every single time that you have a trust in. So again, I'm looking at this, and if I were to look at it from a 1 minute time frame, being more experienced, I can kind of sit through that and you'll see me do it in the recording. But as a developing trader, that'll catch anybody. Sitting through all this is not easy, especially when it looks very animated on a 1 minute chart with a move like this, and that may entice you to get out of the trade before it finally goes your direction. So some advice that I'd like to give y'all: if you get into a trade and you're on like a 1 minute time frame, you already have your risk predefined for a reason, right? So you already have your stop in place for a reason. Unless you're risking too much money, you should not be too worried about small fluctuations in price. You should allow price to do its thing, because consolidation can just mean reaccumulation. So if you just zoom out for a second from that 1 minute time frame, maybe go up to a 15 or a 5 minute, you're going to see that price really hasn't moved that much. If you look in the lower time frame on a 1 minute, it may look like it's doing all kinds of stuff, and it's playing with your emotions. It's making you want to get out of the trade. But if you move up to a time frame like a 5 minute or a 15 minute in that scenario, you'll see, okay, price really hasn't broken higher or broken lower. It's just consolidating. So there's really no reason to be worried about the outcome of your trade. You just kind of have to let it do its thing. So again, that advice would just be, when you're worried about these small fluctuations in price, just zoom out and look at the bigger picture, because price in that consolidation, it's likely just reaccumulating to go higher. And that's what you'll see me type out in the video, like right in this area. I'm saying like it's just reaccumulating, and you'll see that in a lot of my execution recordings. You'll see me typing like it's just reaccumulating, be calm and be patient, because this is the kind of stuff that we have to wait through sometimes. It's always great when we get a setup that we catch the low and it goes immediately in our direction. But if we can't hold through stuff like this, our system is not going to show its edge over the long term. Because if we get out of trades like this when we're supposed to still be holding, it's going to mess with our system's long-term results. So you can't let psychological factors in your trading hinder your performance. You have to let if you already got in the trade with a predefined risk, let it do its thing. Try to move up to a higher time frame so that you're not too swayed and too influenced by tiny little fluctuations in price. And yeah, that's pretty much all I wanted to talk about for this setup. I went through the bias and then I went on a little bit of a tangent about patience, but yeah, price hit our entry. Obviously, waited around in here for about an hour. The recording will be sped up, of course. I'm not about to post like a 2-hour video, but eventually, price finally traded into our first target, which is this buy side right here. And then next, it traded into this buy side target, which was July 29th's high. So once it traded into there, I was happy with the 4.5 R and I took the full profits. And we were getting up close towards that daily FVG, but we just traded above all this buy side liquidity. So at that point, it's really likely that we could see a retracement. And I don't want to be holding my full position size the whole way back down into this move. What if that runs down and takes you out? You know what I mean? Or what if it's a reversal and it doesn't get up to the area you want? So you always want to be taking partials along the way and securing yourself your money. But yeah, that's pretty much it. I'm going to go ahead and run the execution recording. If you enjoy the video, make sure to drop a like and subscribe. Appreciate it and enjoy.